How are you now? Broadcasting from the studios of Lakes Entrance in East Gippsland, Victoria, on the border of, I'm going to give it a go, Tatungalong country. I apologise to them. It's the Theory of Thing Investment Podcast, Season 8, Episode 2. Remember, if it's talked about enough, it's a thing. That's why we named it this. This show is brought to you by the Australian Mutual Funds Exchange, also known as Amfex, amfex.com. Check it out today, giving you access to pretty much any mutual fund on the planet, all from the availability of your phone or desktop. Speaking of which, not really. I'm James Whelan, Investment Manager at VFS Group. I'm a white male, age 41. I'm wearing, because I'm at the farmhouse, the beach house, I'm wearing grey slacks, a blue 3/4 length top, and a sleeveless fleece, because that's just how I roll. I feel like a private equity manager here. I am joined by Heath Moss of HLM Investments. Heath, how are you now?
Very well, thanks, mate. Gave a great picture of where you're at the moment. I dare say it's a bit chilly down there. It's really chilly here in Adelaide, so it'd be even worse where you're at, I think.
No, it's okay. We touched down on Sunday, and just take a step back. The reason I did that last week, just a description of what I'm wearing and where I am, because I've got a friend who's working really closely with some things on trying to make things more accessible for people who are visually impaired and differently abled, which is cool. And she does great work. And someone has said, James, it's a podcast. There's no visuals in this thing. I'm just going, you know what? I'm just going to help people paint a picture of exactly what's going on.
No, I've heard of that. I've heard of that done before. There's a few podcasts out there I listen to, mainly gaming ones, but they do the exact same thing. They describe the environment and what they're wearing and that to give those who are visually impaired in that a better idea of what's going on.
Theatre of the mind. That's it. You know what? It helps me as well. So just imagining in the car trip when I've got an 8-hour car trip to get back from this place, which I love down here at Lakes Entrance. We arrived on Saturday, and I've just got work to do down here, so a lot of farm work, and then I just do some really big project work. It was about 13 degrees. Rain was going sideways on the Sunday. I just thought, this is perfect for doing work and actually getting stuff done. Curl up by the fire up at the Kalimna Hotel. With a laptop and just really hammer into some research and really hammer into a few things that I got going on. And no, the weather's actually been quite good. So it's out, long walks with the dog, and any spare inch that I've got, I'm actually taking the time outside with the son and my littlest, who came with me on this one. So trying to just maximize the family time, and maybe some of those big pieces of research that I really wanted to get my teeth into didn't exactly get the attention that they probably should have got. But I'll just make some time for that this afternoon, I think. So that's how that's going to go.
Sounds fantastic.
It is, and getting back this weekend refreshed and ready to go. Speaking of which, so this episode is being recorded, like I said, East Gippsland, Victoria. It's 9:16 a.m. in the morning on the 20th of April, 2023 AD. Now, it's been a week, Heath. It's been a week.
It always is.
Yeah, well, that's why we do what we do. Just trying to break it down, decipher it, talk about, and let's stay in the theme of what the show is called, the theory of the thing. What is expected, what's not expected, what's baked in, priced in, and done. I think that Emma Fisher last week on that podcast really helped us, or it just reiterated that there's no surprises except the stuff you really don't know.
Exactly.
If you're reading about the potential recession in the Financial Times, then it's already priced in. Trust me, it's already priced in. And so some of this stuff just hasn't. The size of said recession is a completely different thing. For example, so that Genevieve, I've spoken about her before, that she's got a Twitter account. She has a CFA apparently as well, which is good for her. But she did mention, just talking about how bad earnings. No, actually, she was talking about how good earnings have been. That it's been a majority of beats, and how that shows a strength in the economy. I'm just like, no, for me, that's wrong.
Yep.
Just because earnings are beating doesn't mean that things are strong, because you've got to remember that they're beating. What are they beating, Heath?
Revised down earnings. These earnings, like the earnings over the last quarter by analysts, have been revised down at twice the pace they're usually revised down. So analysts are coming in lower, and these companies are beating these lower expectations, which is great. But you've got to take it with a pinch of salt. And it's really early on in the Q1 earnings season over the US. I mean, we've had a week of it basically, and we have had some big names in there, but none of those were expected to cause any problems.
Yeah, I don't think. Well, even the Tesla one, which literally just dropped about three hours ago. their cash was in the hundreds of millions when 3.2 billion was expected to come in.
Yep.
I don't understand how you could possibly have expectations that far away on cash, especially since they screwed their margins by flogging off the cars at a massively discounted rate.
Yep. I mean, but you work in shorter time frames. It's harder to forecast these things. Companies may, they were originally maybe going to lay a capital outlay that they decide to bring forward, or I'm not sure. I haven't looked at the Tesla stuff too closely, but maybe they're starting to account for, the new plant that they're going to be building in Mexico and whatnot. So who knows? But yeah, those margins are really tight now, or coming in quite tight. They came in from 19% to 11%, and that's what happens when you have to cut these prices because of more competition and making these cars more accessible to the everyday user. Yeah,
and across the board, we are seeing continuing margin pressure, I suppose. And I was stressing about that towards the end of the year last year, just talking about, guys, pay attention to margins, make sure that you've got companies that can robustly protect their margins, which is why you want to make sure that you own a good quality companies or a good quality ETF that's out there. And I heard one of our colleagues, Andrew Wieland, is up in Toowoomba, talking about this on Ausbiz yesterday, just making sure that quality is in there. QUAL is one of the ones, but QHAL is probably the one. We're trying to make this more relevant so that you've actually got some ideas and trade ideas, but buying quality is hardly the newest idea that's ever been out there. Now, focusing on this, so I've got an FT report in front of me, which has got the performance of the top 10 stocks since the SVB meltdown. Apple, I mean, look at that, 8% potentially. Meta's up almost 20%. Alphabet, over 10%. I mean, the big tech has just run really hard. I'm looking here, trying to find, just because we're staying on earnings here. Big tech, atmosphere, big tech rally, we see some reason for concern. The recent rise, so this is unhedged, in the unhedged article that came out, I think last night or this morning. No, this morning, just a little while ago. Focusing on the big tech rally, though, we do see some reason for concern. The recent rise of the FANGs, et al., looks like a knee-jerk reaction to the fall in rates and expectations that followed the banking mess. The 10-year has fallen from 4%-ish to 3.6%-ish. As we have often said, the low rates good for big tech trade is just so 2021. Life is not that simple anymore. I'm inclined to agree.
Yep, 100%. And you look at something like Nvidia, which has rallied 100% off its lows. I mean, it's still 30 or 40%.
Yeah, I caught about 6% of that.
Yeah. It's rising into an environment where semiconductors. There's a glut of semiconductors around the world. You look at the South Korean semiconductor inventory index. It's one at near-term records. And you look at Samsung, etc. They're actually winding back production of some of their chips because there's just too much out there. So a lot of people are putting a lot of and I think this is where a lot of the rally in the tech stuff has come from. Is this AI theme? We saw ChatGPT came out a few weeks ago and blew away the world how good it was. And now we've had every man and his dog come out with their version of it. And I think that's spurred a lot of the rally in the tech space as well. People got excited about this and the future and what this could bring for the future of earnings for these companies. And in the near term, they're going to really struggle with some of these earnings. And because, if the US is heading into recession, 40% of the US GDP is made up of small and medium-sized companies. And these small and medium-sized companies use companies like Microsoft and Google and Amazon, etc. So if they're going to pull back demand, you're still going to feel it in those bigger companies, as secure as their earnings are. So it is, I think I said it in my note I was put out to clients last night. I said it's the most untrustworthy rally I can remember in recent history. It just doesn't add up to me how we could be trading on 18 times forward earnings, and that's rising into an environment where we're going to hit a recession. We don't know how deep it's going to be, with possible, really nasty stuff around the corner in terms of commercial real estate in the US.
Yeah, that still should not be discounted either. And we did mention that last week, that just because it's off the front page doesn't mean it's gone away. It's still very much an issue. I reiterate though that the Fed is quicker and bigger and more able to fix the things that are busted than to not. Now, going on with that, there's two things that I've got on my my little note at the beginning of the week, and also so first off, I'm going to quote Jamie Dimon, because we all love Jamie Dimon from JP
don't
Morgan.
We all love him.
Yeah, they actually changed the name of our chat group to something about
Jamie Dimon fan
Chris
club.
Weston, has he got a problem? Is Chris,
I
he okay?
think he's got a bit of a man crush there.
You think?
Yeah.
Jeez.
But we all do. If you don't have a man crush on Jamie Dimon, there's something wrong with you.
I don't know what's going on. Anyway, whatever. Okay, he's a good-looking guy. Okay, well, we're not going to go to this route. So, he's talking about the bank reporting that came up this over the last week or just over a week. JP Morgan, Jamie Dimon. Here we go. Quote: "The consumer has money. They pay down credit card debt. Confidence isn't high, but the fact that they have money, they're spending their money. They still have $2 trillion still in savings and checking accounts. Businesses are in good shape. Home prices are up. Credit is extraordinarily good. That's going to continue in the second quarter, third quarter, and after that, it's hard to predict," which is fair. The commentators are inclined to agree. I'm inclined to agree too.
Well, I sort of am, because with the consumer can stop on a dime in terms of its spending. Confidence can be wiped out really quickly, and it's with the consumer, it's generally really good until it's not. And we saw with the GFC spending, retail spending, that was extremely good right up until the last second. And if jobs start being lost, the recession headlines and the bad news are spread all over the papers and on your screens every day. People start reining their spending in, or just simply don't have the savings or the money to do because they've lost their job, or their hours are being cut back. So consumer spending, it has looked strong for a while, but I think that's going to change really, really quickly when jobs
really
start being lost.
Okay. Yeah. All right. Well, that's you. I just think that for as long as it is strong, so let's just go through it. 60% of US GDP is the consumer, and say the US whatever is worth X on a potential. So 50% of the world's GDP growth is dependent on the US consumer.
Yeah.
I think that sounds about right if you reverse engineer it that way. So, look, as long as they're still doing what they're doing, they haven't run out of cash yet. And the people who have been let go of at places are from fancy Dan tech places where they were all getting paid too much anyway. And the leaving agreements that people are getting are basically being employed anyway. Anyway. So it's 6 month full pay, full healthcare. May as well still get the gym membership in a car park. And the only thing is you don't have to come to your desk, which I don't think they were doing anyway.
No.
And that's why commercial property is so bad.
No, I did see a stat of I can't remember the name of the occupancy, the office occupancy stat I saw last night. It's a niche one, and it measures the top 10 cities in the US or something. And the occupancy is only at like 48%. It is disgustingly low. These are all problems that will come home to roost later on. And I actually hate being this bearish, negative guy, and I rarely am. I think you've known me long enough to know I'm pretty positive when it comes to markets and
usually be bullish. It's always a good strategy.
Yeah, and longer term, I still am. You've got to be bullish. Develop markets like the Australian and the US and that in the longer term, because they do tend to perform well.
Yeah.
But in this short term, I'm just really rattling my brain to see how we come out of this without a recession and where earnings pull back 20% maybe, 10 to 20% maybe.
Okay, that's right. Well, okay, now subject change, because we are trying to make these podcasts tight and short and sharp, 20 minutes tops. If we can get there, we can get there. That's where we're at. We'll go into I'm down here. Along with my sleeveless vest that just doesn't have a Patagonia thing, because I bought it at Lowe's or something like that years ago. I would also be wearing a red hat that has elders written on the front of it. It was given to me by a charming fellow who's one of the valuers that we have for markets down here, because we're cattle farmers when I'm not stockbroking, or podcasting for that matter. One of the elders blokes, we just went out and had a bit of a look. We're trying to sell some yearlings. We've got some steers and some heifers that look amazing. And he says that we're going to get, it's not close to what we were getting a year ago when beef prices were just insane.
Yeah.
But we're looking at about, I think it was $1,300 to $1,400 in 2 weeks' time for the heifers, and about $1,600 to $1,700 each for the steers, for the fellas. So that's pretty good. It's definitely not where it was, but it looks like that we've had about a 30% drop in beef prices as well, cattle prices. That's about set to. I mean, these guys know what they're doing. If elders tell you something, that's pretty much how it's going to go. And I've got a hat, so I mean that's pretty cool. But yeah, I think that we've based on commodity prices, maybe a little bit of pop up just going into winter, and then that's pretty much where everything just stops. People don't sell in this area in winter. So, mate, it looks like maybe commodity prices have, what from those crazy peaks have stopped, maybe a little bit higher to go. What have you got on the radar for you?
We've been talking about copper. We know about copper. China had some really, really good economic data out during the week. GDP for Q1 beat. I really liked the retail sales figure beating, came in above 10% when around 7% was expecting in growth. And this time around, it's going to be a consumer-led recovery in China. The Chinese people have massive bank accounts, the swelling of their bank accounts because they got locked up. Like
amazing savers too. Yeah, I mean, even if they weren't being forced to do so.
Yep. And so that's going to disperse into the economy as it started to do now. Things like electricity usage, transportation, services, utilization, etc., are all at pre-COVID levels now. They're all roaring back. So this recovery in the Chinese economy is going to be consumer-led. Now, there will be still infrastructure and construction. It has to be. It is such a cornerstone of their economy, and the government is pumping huge amounts of liquidity into that. Their M2 money supply figures have turned back into expansionary territory again, but we really won't see a lot of that play out in the economy for another 6 or 12 months because it just takes that long to filter through. So copper involved in everything, aluminium, alumina, or however you say it, the same thing.
Aluminium, that's how you say it. How's it? There's no other way of saying it. I don't care where you're from. I don't care if you're 50% of the world's GDP, mate. You don't get to say it any other way. It's aluminium, and that's the end of it.
So that is also another favourite of mine, simply because it's just used in everything. Consumer goods, transportation, electronics, everything. Yep. So that's another favourite.
We can't bang that table more than anything.
No. I think lithium is close to presenting us with another opportunity. Spot prices have fallen about 60% in China. I did write to my clients at the end of last year that, spot prices and lithium stocks would fall by 50% or more from their highs. It has. Now the Chinese consumer is waking up, will start buying more of these cars. Battery producers have, eaten through their inventories of lithium. So they'll need to restock because obviously demand is still there for these electric vehicles over in China, even though the subsidies have moved away or been lessened. So I think lithium may present our opportunity there. And I'm favouring producers like Mineral Resources and Pilbara. If you're looking at, your developers in that, PMT, which is Patriot Battery Metals, I think I've mentioned it before. I think they've got absolutely something massive on their hands there in Canada and James Bay, and could be a takeover target. And GL1 as well. I forget their name. It's Global something or other. They're another one.
Get these from? Yeah,
mate, they're all listed here. They're all.
I know, man. You and I just move in different circles. I swear to God.
I know.
You talk about these things, global lithium resources, and next thing you know, I've got to mute this stuff on Twitter because everyone's talking about it. It's just like, how do you all know what these? Anyway, sorry. Yeah, global.
I'm looking at
resources.
The hard rock, mainly the hard rock stuff. I think that's where the money is, and we're seeing a bit of consolidation there in the South American giant how do you say it? Albemarle or whatever.
Albemarle.
They've made a large bid for Liontown. Mineral Resources is taking a 20% stake in Essential Metals, who already have a takeover offer on the table. So they've built a blocking stake there. I think you'll see more mergers and acquisitions in the space since prices have come down. And I'd expect lithium prices to remain historically high, but just nowhere near where they were 6 months ago. I think those ridiculous prices and they had to come down. So the future's looking bright there.
Yeah, it sure is in that regard. I got no problem with that. I'm just looking through your note here, just seeing some of those. Like when you list. Oh, so I get a little mention here in your note too. Thanks for that, mate.
No worries.
You can see I didn't read all the way down until just now.
Well, if it makes you feel any better, my wife only reads the last paragraph where I talk about, home life and family and kids and that, and she gets really, really stroppy if I don't mention anything about the family or anything
Really?
like that. Yeah, she likes to have a read about it, and I've actually got a few clients that love it too. They love hearing the updates and whatnot.
Yeah, a little bit of
nice. I'm a family business, so you got to connect and tell your story. So yeah.
It is a real thing until robots take us over. That's how it's going to be. I do notice that clients do actually want to be talking to a real person, and then to know that there is a real person there who actually is someone that's important.
Yes, for sure.
Retail is a funny business. In institutional, It's basically just how much money can you make. Can you get me the best execution? With retail people, a lot of it is legitimately just the relationship. It's
people business, definitely. And the last one is just quickly gold. Gold has remained above 2,000 US dollars an ounce for I think 12 consecutive sessions now. I thought it was 11 yesterday. It was 12 today. By the looks of it, that's a record for staying above 2K. So it's some really good consolidation there. And if yields are to come down still, or even remain stable, and the US dollars to come down, there'll be a bit of there's a lot of central bank buying in gold as well at the moment. I think gold, we could see new record prices on gold in the next month.
Our mate Greg over at Blue, where is he now? City. He started at CityWire or City Index. Sorry, not CityWire. Yeah. City Index, also known as Blue Wolf Pack on the Twitter. Mm-hmm. He's a legendary bloke, but he's just started with City Index doing their commentary, stuff like that. I actually got a fake tattoo of a blue wolf in his honor of this one.
Beautiful.
He's opened up. They've got a little fake tattoo shops that's set up near the beach here. So we go down there with my littlest, and she gets a ballerina, and I get a blue wolf. Very cool.
Fantastic.
Where were we? He has opened up 2 positions this week that I know that he has done. One is being short gold, and the other one is being long US yen. I think that was it. So he's
expecting a reversal of what I've just said,
or is that the other way around? Was he long yen? What was it? A risk? It's effectively a risk-off trade. It's a higher interest rate trade, which makes me wonder why he's yen. Anyway, whichever way around it was. But the gold is going to go, in his view, gold is going to go the opposite direction, just based on that simple fundamentals that if rates do go a little bit higher, as the Fed, a few Fed speakers, I wish they'd shut the hell up, but when they say stuff that you got to listen. Even if they're voting or not, they think that rates are going to be a little bit higher for a little bit longer. We saw US inflation numbers out last night, just showing how crazy it is over there as well.
Mm-hmm. UK numbers, you mean?
Sorry, what did I say?
US.
Oh, yeah, UK. Sorry, yeah,
yes.
Yeah, different. That's absolutely crazy high. That if rates do pop back up a bit, then gold is going to go in the other direction. So a short gold trade there is his soup du jour. Now, football.
Yeah, mate.
What have you got? Now, I've sacked him.
You've sacked your bloke?
Sacked. Dave is gone. Thank you, David, for your time. You're on a 3-month holiday.
His record was horrendous.
I'll come back the same way. I'm just trying to think about the time when I was at UBS and we got a holiday from State Street or something like that. And it's just a really simple thing. It's just like, hey, we'll talk to you in 3 months, man. That's it. So see ya, Dave, because your tips are absolute dog poop, and you're going to have to go. So I'm doing it myself. I'm opening up my account and I'm having a look myself. You go first, though. First off, wow, Adelaide being sold out for Magic Round. I'm not going to. What's it called?
For Gather Round. Yep, it was. The vibe around the city was electric. I walked through the city on Sunday, and it was packed, and it's just the vibe. There was a lot of entertainment going on. Different people of different walks of life with all their footy gear on. It was just fantastic.
Yep.
It was, and I'm glad we've got it for the next 3 years. I think really, bed it down, give it a name, give it an identity, and then move it around the country as we see fit.
It's on my calendar. It's on my calendar next year to get over there. Amazingly, times in well with the Live Golf that starts tomorrow, I think.
It could be today.
It starts today. I saw photos of the launch last night. It's probably on right now for all I know. Yep. Pull it up on the YouTube. I haven't watched a scrap of Live in my entire life. Okay. Your tips go first. Oh, no, what I was going to say is that straight after we talked about the Gather Round being completely sold out, the NRL had the Bulldogs versus the Eels game. which I managed to get wrong because the Bulldogs had like 4 injuries in the first 5 minutes of people who just couldn't walk anymore. So I got a little bit stuffed on that one. But that was sold out. There was like 47,000 people sold out.
Wow.
How's the Australian consumer doing, Heath?
Oh, still really solid. Still really solid.
Stubbornly good, aren't they?
Again, we have that mortgage cliff coming in the second half of the year. That's going to suck a lot of demand out. But what I will say with retailers is we do have very high net immigration, so that will help support our retailers and probably save them from something that could be really, really bad.
Yeah, things are fine. Things are fine.
Yeah. But right. Tip for the week. I'm actually going to go with my Crows here. We're playing Hawks down in Tasmania, which generally we don't do too well.
Oh, really? Yep.
Yeah, we struggled down to Tasmania, and I can't remember the last time we won down there. But anyway, I'm saying the Crows to win between 1 and 39, paying about 210. I think just keep it nice and simple there. I came through with my bet on the weekend. I can't remember what it was. I think it was Pies to win. I think it was Pies to win 1 to 39. And that last quarter was a roller coaster. At one point, like they were going to blow it out, and the next minute, it looks like Saints could run over them. So, but yeah, Crows to win 1 to 39. I think that's a good bet. I think we'll win by a couple of goals, 2 or 3 goals. Even though Hawthorn aren't the best, we tend to struggle down there.
Not bad at all. Also, just on a note before I do my footy tip, note here from Gareth Aird has just hit my inbox, and because it's from Gareth, I know that it's already publicly available, so I'm not giving away any CBA secrets here. Q1 23 CPI preview. We expect the headline CPI to increase by 1.3% for the quarter in the first quarter of 23. That's 7% for the year. Trimmed forecast to rise by 1.4% for the quarter, 6.7% for the year. Okay, did you write that down?
Yep.
He's right about everything.
Slightly lower than what we got in the fourth quarter last year. I think that's slightly lower. But we lag. It will take a little while for that to filter through the numbers here in Australia.
Good. Gareth is still saying that RBA another rise for next month for 25 points, and then I think he's probably still on that same track of doing cuts at the back end of the year and the beginning of next year. Okay, now my tip. I can't remember what I was going to tip. Tomorrow night, so Friday night for anyone who's listening, is going to be the Eels versus the Broncos. I think that the Eels were quite fortunate last week against the Dogs, and the Broncos are the real deal, especially all the old Broncos. You wouldn't have seen it. Gordon Tallis sinking cans of VB with the US ambassador, Kennedy. He didn't take his eyes off her. I've seen a man absolutely smitten with this woman, and the Broncos had her out for a bit of a training run the other day. She can hoof a ball with the left foot, which is always good to see. So I think US Australian ties have never been stronger. As long as Big Gordo's getting in the front row there, good on him. He should be an ambassador actually, better than the one that we've currently got. I reckon that the Broncos will beat the spread. They'll win by so they've given them a 3.5 point hindrance on that one, and I think that they'll win by 4 or more. It's going to be a piece of cake. They're the real deal. So Broncos, that's about $1.96 that you should get for that. Double your money. 5 gets you 10.
Beautiful.
Okay, that's it, mate. Short, sharp,
Excellent.
Sweet. Don't forget we're sponsored by Australian Mutual Funds Exchange. Check out amfex.com if you want access to any mutual fund in the world, especially India, which is what I was supposed to be hardcore researching on this trip here. So have a look at some of the Indian mutual funds that you can have access to. Go to amfex.com, get a login, have a bit of a play around, and I don't know, if you want, deposit some money and do what you need to do.
Beautiful. Excellent.
All right. That's it for the show, mate. Have a good one.
Thanks, mate. It was another good one. Yep.
Anzac Day next week. Make sure that you spend some time. Get out to a service. It doesn't have to be a dawn service, but it's nice if it is. But see a march. Get your kids out, especially get your girls out to go and see. There's so many role models out there that you should respect. And then settle in for the afternoon and just watch some absolute cranking football. It's the first time that Essendon and the Pies will meet being top 4 teams since last century.
Fantastic.
So that'll be an absolute barn burner. So get into it. Anyway, so for the Diggers, have a good one, and I'll talk to you later on.
You always have a good one, guys. Bye.